Okay, welcome everyone to the Sky Community Call, 18th December 2025. I'll start with the usual disclaimer that nothing presented should be construed as investment or any other type of advice, purely informational and educational purposes, everything we go through. I'm glad to be joined by Kian from Team Keel, who need to get off early. So thank you, Kian, for joining us. And I'll hand the stage over to you to provide the community with an update on Keel activity.
Sure. Well, thank you guys for having me. Glad to be back on with some updates. I guess the big news that we had to share just this week at Solana Breakpoint, which is kind of the highlight of the Solana calendar, was that we've kicked off a rather high-profile RFP following in the footsteps of the Spark Tokenization Grand Prix. Not that long ago, we took some inspiration and stuck with Keel's nautical themes and have gone with the Keel Tokenization Regatta, which has been met with a lot of excitement within the Solana ecosystem, but also with a lot of asset managers and tokenization platforms more broadly. So I'll just give a quick overview of the news that we shared. It kicked off with submissions due by 31st of January. For this first season or first placement, there's an intention to allocate up to $500 million into those assets that we sort of deem suitable and successful in the allocation or in the RFP process. It is a public RFP with, as I mentioned, a lot of inspiration from the process that was run by Spark in placing those money market fund and T-bill assets. But in this case, we are looking for a slightly different category of assets. And rather than being overly prescriptive, this time around, we've gone to the market with sort of some of our constraints as a star. And so those familiar with the allocation framework will probably have a good idea of what that looks like. But to give a quick overview, that means legally robust Solana-native assets, dollar denominated with low duration and low to no directional exposure. And these, of course, need to be highly, highly liquid assets with sustainable low volatility and predictable risk-adjusted returns. So the entire RFP and all the much richer details are available on the Sky forum. We've just put a short link or redirect on keel.fi/regatta. So it would invite folks to take a look at that and explore and get involved in understanding the process. And then interestingly, what we've decided to do in this case is we've actually split it into two tracks. So track A is for immediate deployment. So those issuers and asset managers who are sort of pitching assets that are already live in production, or where these assets can be brought to production and ready to receive allocation by the 31st of March 2026. And then track B is where we're really looking at pipeline development. So this is about bringing assets to the forefront that are maybe not ready in those timelines, but that are in development, or that are assets that could be made available for the right level of interest. So it's really about bringing these, to Keel's attention, to Sky's attention more broadly across other allocators. And in particular, in this case, we work very, very closely with the Solana Foundation and their solutions team. So a big part of this actually is getting a snapshot of state of readiness across the market to help to identify gaps where maybe some solutions are not particularly well serviced, and where there might be scope for organizations like the Solana Foundation to play a role in accelerating or fixing some of those gaps, or working with other solution providers to sort of accelerate issuance of high quality assets in the space. So we're very excited to see, across both tracks, but in particular track B, to really see what is 6, 9, 12 months down the road look like. And these are all, of course, organizations that are very excited to work with Keel and to work with the Sky ecosystem more broadly. And yeah, on that, in the last number of weeks in the run up to this, the team and the folks involved in the regatta have been working very diligently to try and set up the RFP and make sure everything's in order. But we've also been having a lot of conversations with people that are leaning into this. And so it's been really, really encouraging to see the level of support. We've had conversations with more than 40 asset managers, tokenization platforms, and others in the tokenization stack that intend to submit bids or submissions to the RFP. And these are some names that really would surprise you, that are very, very excited with this. Real kind of marquee household names in traditional finance, really leaning into this as an opportunity to, in some cases, make their first foray into issuance on chain, and in others to expand their product offerings in the space. So yeah, that's really all I wanted to cover on the updates. But very happy to take any questions that you guys have, and I'm sure we'll be back on in no time to share some updates as we work through the process and get some submissions coming through.
As always, for any questions, please use the chat. And Kim, I mean, maybe I'll just kick things off. I've been fortunate enough to be at a few events with you, and seen sort of firsthand the excitement within the Solana ecosystem and the foundation. Like maybe you can expand a little on sort of some of the feedback you've been getting from the wider ecosystem.
Yeah, I'd echo that. It's been really encouraging. I think in particular, we announced the existence of Keel just 2 short months ago. And since then, there's just been a constant stream of inbound, both across DeFi and tokenized asset space, to really understand what this means and the impact that it can have. I would say, in particular, since word has gotten out about the regatta itself, there is an enormous volume of inbound interest from these asset managers and institutions. The Solana Foundation, in particular, has been really supportive of this, for the sort of moment in time this creates, or the kind of catalyzing force this creates, to really, make the space aware that DeFi is open for business, that Solana is open for business, that Keel is open for business. And it's, for a lot of these organizations that have invested in R&D and have had departments thinking about tokenization or thinking about the right way to bring assets on chain, this is a sort of catalyzing moment that gives them the opportunity to bring it to the board, right, and move a lot of these programs forward. And that has been lacking historically in the Solana ecosystem, where there hasn't been historically an on-chain capital allocator at scale, in the way that other ecosystems across the EVM have benefited from Maker, from Sky, and from the stars that have come before us. Definitely a lot of a terrific amount of excitement.
We do have a few questions coming through. I'm not sure if you can see the chat or if I should read them out for you.
I don't see the chat. Let me see if I can find it.
Should be at the top right. There's a little icon for it.
What's the entry point for a small retail bike holder? Is this in the context of being able to allocate into some of these assets that are coming on chain? I suspect for many of these kind of institutional grade assets, they tend to have sort of onboarding processes and minimums that tend to be in the tens of thousands. But I think that's very specific to the particular assets in question. From Chris, you say you have interest, but has that translated into any applications yet? Actually, interesting point on that. We have worked with an organization called Particula, who have supported us in both building out the questions and the assessment process and due diligence process for the regatta, but also have actually built an entire platform for us to facilitate that data collection. And so one of the interesting things is we can see sort of stage of progress, and I think we've already had, in just a few short days, more than 10 organizations who've already actually started completing the submission process. So even more than we'd expected this early on, but definitely very encouraging to see. Can you elaborate a bit more about, based on what metrics you're going to allocate capital? Sure. So what I would say is we've got a number of constraints that are hard constraints, of course, which are around the quality and the robustness of the tokenization, even aside from the underlying economics. So that's things like the legal robustness, tokenization robustness, the security audits, the jurisdictions, these sort of core factors that just absolutely there's no negotiation for for anything other than the highest quality. But then when it comes to the underlying economics, there's basically three broad dimensions that we need to operate across, that we need to sort of work within, and they really come from the allocation framework from Sky itself. So the first, I guess, is a yield hurdle where, we're all aware of the Sky savings rate and the Sky base rate that is afforded to star allocators. That's the first hurdle. Obviously, it needs to be in excess of that to generate a yield, both for Sky, but also a margin for Keel as an allocator. The second is around liquidity, and obviously these need to be highly, highly liquid assets. Um, while there are requirements in the Atlas that deal with meeting ASC and meeting peg defense, we're going even more liquid than that. So looking at institutional assets with deep primary liquidity, and looking at assets that have sort of daily NAV, T0, T1 settlement. So really, really liquid assets. And then the third is around risk capital requirements. So again, those familiar with the risk framework or the allocation framework, there are capital requirement ratios that a star needs to hold commensurate with the degree of risk being taken by these assets. And so we're looking for assets that are treated favorably by that framework. So they're sort of the three guiding principles that and constraints that we're working within. Is the points program planned? I don't have anything I can say about that at this stage. We'll certainly be back on some point, I'm sure, to talk about plans for a Keel's token launch and ways that folks can get involved, but there's nothing I can say at this point. I guess I'm trying to understand how it's going to be differentiated and whether this can bring more uncorrelated strategies to the Sky ecosystem or just exposures to a different Solana ecosystem. It's a really good question. We're certainly trying to be open to working with new asset managers, new tokenization platforms and others, and we certainly don't want to bring in any bias for or against platforms that the Sky ecosystem has worked with in the past. So it is really a very level playing field in that regard, if that answers your question. And then I think in terms of differentiation in strategies, as we just went through, some of the constraints that we're working with are common to all of the stars. I think there's going to be a natural tendency to have to work within those constraints. But hopefully, yes, we can try and identify opportunities to be diversified and have some differentiation in strategy where possible within that constraint window. Are you thinking about a potential asset liability mismatch of the off-chain assets of the real world assets and usually limited on-chain liquidity versus the near instant duration of liabilities of USDS? Yeah, I think this is a very valid question, and this is what comes down to the difference between stars, being asset liability matching allocators as opposed to some sort of a more speculative fund. And I think as we went through, the liquidity constraint is a really, really important one. There's a degree to which the asset allocation framework is about balance across highly immediately atomically liquid assets, with assets that have slightly less immediate liquidity but are still considered incredibly liquid assets in the traditional finance context, with T0 and T1 settlement. So this is something obviously we consider at allocator level, but we also work with other ecosystem actors from the Sky ecosystem to understand and model what those liquidity requirements are. So it's definitely a major consideration.
It looks like there are a few more questions coming in, if that's okay, Kian. I know you have another meeting to get to, but yeah, let us know when you need to call it.
Yeah, I'm going to have to drop in a couple of minutes, but happy to take one or two more questions before we wrap. I see a specific question here about a specific asset manager. At this stage, I'd prefer not to make any comments about any specific asset managers, but we're definitely, I can say we're very much scouring what is out there and have a pretty good understanding of the suitability of asset managers that might be in the ring. When Discord, we haven't got a Discord up and running yet. We're sort of holding off until we've got a way for community to be more actively involved. I think at the stage of progress of Keel right now, there's been an enormous amount of work in the background on infrastructure building and establishing relationships and partnerships. But very much looking forward to that next stage where we can build a greater presence for the community and a greater kind of purpose become involved. Chris, what role does the Solana Foundation play? Just technical support? No, it's much more than that. We work very closely with the Solana Foundation, both folks on the solution side, on the DeFi side, on the stablecoin side, and on the institutional side. They have been a tremendous pipeline contributor to us. Many of the asset managers that are really leaning into this have come via the Solana Foundation. They obviously help us with a lot of our questions about what is the right way to really make the most of Solana and its technical capabilities. And they also work very closely with us, in terms of Keel's DeFi plans and DeFi integration plans and the relationships there as well. So we really do have a really tremendous partnership with the Solana Foundation. So I might just take one last question here before I wrap up, if that's okay, guys. Tranche B submissions, how much detail is needed on token design, etc., before January 31st? We have some core requirements in terms of submissions of the details that are necessary, but we've allowed folks submitting for Category B to optionally complete any questions where we may not expect folks within production assets to have completed them. So it's sort of dependent on the stage of readiness of submitters. We're being a lot more flexible there in terms of the level of detail that we might expect them to be able to provide. And that's obviously, by design. We understand that folks in track B are going to be at different stages of readiness. But of course, there are no allocation decisions being made in respect of track B based on that information. So it's very much about giving us a sort of a sample of what might be to come, and to be able to identify partners or assets we might like to explore in greater detail as and when they get closer to market readiness. Cool. I hope that was useful, guys. I'm very excited to keep you posted. I'm sure we'll be back on in a couple of weeks to share updates, post submissions being received and as we work through the due diligence. But yeah, thanks, Rajiv, for having me on. I appreciate it.
No, thank you so much, Kian. Yeah, feel free to leave. I know you have another commitment to get to.
Thanks.
Okay, so we've reversed order. I'll go into our 2025, a quick review, and then our usual dashboards review. I appreciate everyone joining on the eve of Christmas. This won't take long. So we normally do a review of the period. I thought since we're at the end of the year, we'll have a quick look at 2025 and a few of the major call-outs. And of course, I think the big one is really after so many years of talking about Endgame, it was finally delivered. That include the complete rebranding, the migration of Maker, token holders to Sky, new listings on the major exchanges. The promise of Endgame was always an autonomous financial system with parallelized growth through stars. And I know we've got a lot of Sky enthusiasts here, so everyone can take their own calls as to how close we are to that. But of course, we've seen huge progress. I mean, I really just see this year as a year of execution. And we've seen so many developments with the Atlas, with the primitives, with the Sky agent framework and new modules coming online, such as the monthly settlement cycle, the treasury management function, and of course, the Sky Foundations launching the Frontier and the Fortification. And speaking of the foundations, hope all of you saw yesterday the first release from the Frontier Foundation of the State of Sky Ecosystem report, which gave, I think, some much needed visibility into overall fundamental metrics for the ecosystem. And to call just a few of them out, the growth in USDS supply over the year to 9.86, actually even more, which we'll see soon in our dashboards. The increase in annualized net profits, the decrease in operating expenses, and the annualized rate of buybacks running at close to 100 million. So with a commitment to keep reporting back to the ecosystem on a quarterly basis. And of course, we've seen a whole host of agents progressing through the year. And fortunately, many of them have been on the community calls to actually give the updates firsthand. So just to call a few of the highlights out that I've heard over these last weeks on the calls, Spark with token launch, Spark Savings V2, all the work they're doing to explore new market segments, such as off-chain lending, Grove with the introduction of thank you, Chris, of course, the upcoming credit card we all hope to see. But I mean, just a huge load of innovation from Spark, and actually also as a demand driver, which you'll see in the dashboards. Grove introducing a whole host of new RWA allocations to the ecosystem, bringing a great data dashboard that gives you full visibility across asset, protocol, and network, and also as part of that, expanding the GLL deployments to new networks such as Avalanche and Plume. Keel, we've just heard from, but a lot of actually work has been done on just laying the technical infrastructure to scale to Solana, and that involved sort of a migration of bridging from Wormhole to layer 0. Of course, the regattas now in play, and Camino and Drift deployments coming. And 2 weeks ago, we also heard from Obex, the first institutional prime, who announced that we should see the first incubation projects going live already in Q1. And of course, anyone who's on the forum would have seen there are new Genesis agents in the pipeline for Q1. So a year of execution, but lots more to come as part of that journey to an autonomous financial system. And I'll just end with a quick review of the dashboards. So total supply, it's sort of been teasing us over these last few weeks, just under that milestone 10 billion mark, which I very much hope we'll see hit over the Christmas period. That's very much being driven by USDS, and we'll jump into the drivers for that soon. And over the course of this series, I've actually been going over a lot of the different tabs in the dashboard. There's actually only one that we've not covered, which is the aggregate backstop capital, which I'd like to just take a quick look at today, because I know there's also been some discussion in the forum in terms of how to interpret this. So several terms here in terms of aggregate backstop capital, and the allocated Genesis capital, and there's actually a very good description in the Atlas, which I think also just highlights the progress of the overall ecosystem, and especially of the Atlas in being the rule book and the source of truth for anything related to ecosystem. But I'll post this, or you can see this in the chat here, because it's actually, for anyone who is interested, a very useful overview of the different terms in terms of the capital types. So aggregate capital buffer really is that combined aggregate capital across the entire ecosystem, which can be viewed. The backstop capital is the backstop, which is now distributed across the various agents, and the Genesis capital is what Sky has provided to the agents, I guess, almost as in terms of funding. And you can also see in the Atlas the target that has been set for that distributed aggregate backstop capital, as well as, and there's some very clear rules in the TMF for how that will be funded over time, which I believe, is, you can see some of the rules here. So anyone who's interested, it's all there. So you can see the aggregate backstop capital, the allocated Genesis capital, you can see the distribution across the various agents, and that will keep growing out as more agents are added. I talked about supply, and I thought it would be interesting to just look quickly at a few of the drivers of supply. And so we have these demand analysis that we have provided independently as Viridian, as open source queries that anyone can use. But some of the things we track is the overall market landscape for what we called the yield coins, or at least the major yield coins. And you can see that that market over the year, it's pretty much doubled. So outpacing the overall growth in stable coins. And all the major players have benefited from that. Sky with SUSDS, Aave with their deposits for stable coins, and the two biggest, clearly the AETH USDT and AETH USDC markets. Maple Syrup USDC seeing some tremendous growth through especially Q2, Q3, Q4. The one exception has been Athena, who had that rapid growth in Q2, Q3, but have had a very difficult Q4. And it's sort of a brutal reminder of, how our markets operate when trust is eroded. So very easy at times to drive supply. It's also very easy to lose that. And we've seen that time and time over again. And if we look specifically at SUSDS, we had these sort of two moments of aggressive growth, Q1 and Q4. And if we look at the yields that we were offering through these periods, I sort of interpret this as one was driven by a very aggressive yield from us. And of course, that comes at a cost. This Q4 cycle has been very interesting because if you see our yield, we're actually very close to the risk-free rate and very much in line with market rates, whereas in Q1, we were far ahead of other offerings. So a period of expensive expansion in Q1, but Q4, very organically or very efficient expansion is perhaps the terminology I'll use. And we can sort of look at what's been driving that. So starting with USDS, SUSDS clearly is the big driver, but I'm going to just take that out for a second. I'm going to take out token rewards as well, just so that we can see some of the other categories for SUSDS or for USDS and some of the learnings I think we've had through the year, because it has been a year of learnings. There have been experiments and there have been different drivers in terms of where we've seen growth. So the first was the Solana ecosystem, which of course started with Wormhole and then migrated to layer 0. So I'm going to add that in as well. And we saw good initial traction at the beginning of the year. That sort of, but that was very much driven by incentives. For those who were around, it was the integration boost program that really helped drive that. And as you took the incentives away, that sort of came down. And more recently, and actually I should have asked Kian about this, like we're seeing that traction come back on the Solana ecosystem. And no doubt, I'm sure Keel, these are just the first steps of Keel. So this will be an interesting one to watch. We also saw initial momentum with RWA in the beginning of the year that has very much tapered off in the second half of the year. Again, I feel very much driven by the integration boost program that we ran. So clearly this growth comes at a cost. In Q2, some of you will remember a lot of success that we actually saw with Pendle in terms of driving supply, and you can see how that really ramped up in the Q2, Q3 period. Again, driven by the incentives of Spark points, and as soon as those incentives went, you just see how quickly that tapered off. Q3, we saw Spark Lend, USDS and Spark Lend driving that, and more recently in Q4, the introduction of ST-USDS, and of course the liquidity pool that comes with that on Curve. So just some of the other drivers that we've seen through the year, and all of these come with learnings that will be incorporated into the ecosystem. Token rewards, one of the fundamental features of Endgame, worth looking at, because actually in the first half of the year, it had, I'd say maybe less traction than was expected, but you see how that really ramped up as soon as you saw the Spark token launch. And so again, another interesting feature to watch as other agents launch their tokens. And of course, the main driver for USDS, the saving standard, SUSDS. And we talked about those two periods of growth. So Q4 is, if we look at the drivers for this Q4 growth, or actually even that Q1 growth, which was driven by mercenary capital seeking yield, a lot of that actually came from Athena. So if I remove Athena from this, they came in with that early, I think it was $1.5 billion worth of allocations. You can sort of see if I remove that, it's been quite consistent through the year until we get to this Q4 period where demand has really ramped up. And that Q4 demand, if we look at the drivers, it's coming principally from Spark SUSDC. So Spark as a distribution channel for USDS, again, proving to be very effective. Also Maple, a big driver recently over these last few months, as they allocate their idle capital into SUSDS, and also SUSDS on the SLL. And we've got so many categories here that I'm struggling to see it, but here you go. Spark liquidity layer is sort of the third big driver. And you can see this sort of 2 billion increase that we've seen over this last quarter, very much driven by these three components. So those who have, this dashboard is open source, so you can see the drivers as well for the Spark SUSDC offering. STUSDS has pretty much plateaued at this just above the 100 million mark. And the last call out is actually for DAI, because a key part of the overall composition of total supply, it's actually grown over the considerably over the year, and a lot of that has been driven actually by the Polygon bridge. And I'm not sure what's driving that, but you can see the growth for yourself. So activity on Polygon ecosystem and across sort of the long tail of other users that are just too small for us to be able to identify. But DAI, of course, very profitable for the ecosystem, so that growth was welcome to see. And those are the main call outs in terms of the demand analysis. And I'll probably pause there. I'm happy to take any questions. I know it's sort of the eve just before Christmas, but yeah, I thought it'd be interesting to just do a bit of a change it up a little and do a complete year review. And of course, this is open for everyone to access and do their own analysis. I'm happy to take any questions or to call it there. And just want to thank you all for joining us through this series, and joining us on this eve of Christmas. I'll just wish everyone a very happy Christmas and New Year, and look forward to what we have to do in 2026. Thank you all.